Welcome. Today is Thursday, September 9th. I'm Jeff Huge, Chief Investment Officer at JWH Investment Partners and the editor of Alpha Insights. And this is your Daily Five. First chart of the day takes a look at a couple of different perspectives on leadership. And those of you who know me or have followed my work in the past know that I'm a big advocate of following leadership and using leadership to drive investment decisions. And so what we're doing here in this chart is we're giving you two perspectives, one leading sectors and the other leading stocks. And let me explain. The chart on the left actually takes a look at the relative rotation of the 11 GIC sectors in the S&P 500. And with a data visualization technique that allows you to understand where that leadership is in one snapshot relative to the benchmark and relative to one another. So we can see how each sector stacks up in that regard. And what we're able to discern is that in the leading quadrant, the upper right-hand quadrant, technology and healthcare have been the leaders, while real estate, which was leading and is still outperforming the S&P 500, is losing some of that momentum. In other words, the momentum of its leadership and its relative performance have been deteriorating over the last several weeks, about past 5 weeks to be precise. And in fact, communications have moved back to nearly flat with the S&P. We're also able to discern that many of the cyclical sectors, for example, energy, industrials, things of that ilk, would fall into that category of lagging. And then we're able to actually see what's improving as well. And high up on the improvement side is actually utilities, followed by discretionary, then staples, which are just borderline improving and lagging. And it looks like it's turning up to us. So from that, what we want to do is we want to try and identify some of the stocks within those leading sectors in particular, or perhaps even the best stock in every sector. And so that's what we've actually done. The chart on the right actually takes a look at the very best ranked stock from a relative strength and relative strength momentum perspective for each sector in the S&P 500. And we come up with a list of names like Google and Synopsys, Kroger, Catalent, NextEra Energy, Verisk, Ulta, Digital Realty, Chubb Insurance, Ball Corp, and also COG on the energy side. And so, from this group of stocks, what we want to do is try and identify those stocks which might actually give us the best edge over the market on a go-forward basis. And our time horizon tactically is really about a month to 3 months, anywhere between that 30 to 90-day periods. So 1B actually narrows this field a little bit. And what we're really looking at is those sectors that we think are turning up with momentum or have stable momentum, and the stocks within those sectors that we think can perform. And so what we're looking at here on the left is that healthcare really is the more stable of the two in the leading quadrant. And it's also a defensive sector, which is interesting, considering where we are in the market, near the all-time highs, during the month of September, which has historically been one of the weakest months, in the first year of the decennial cycle, which has been one of the weakest years in the 10-year cycle, in the first year of the presidential cycle, which has historically been the weakest year of the presidential cycle. And so, we have kind of this dead man's curve sort of scenario that we're heading into within the month of September, that we want to, essentially take our foot off the accelerator, if you will, and make sure that we're not going to go off the cliff if we see a sudden turn in the road. And what we're looking at here is utilities accelerating to the upside, followed by staples, which are turning up, and actually basic materials. And there's a number of reasons for that. A number of the companies in the basic materials space are experiencing margin improvement because they're able to raise prices because their input costs are going up. And so that is a great excuse for them to push pricing up. and they're seeing heavy pass through. So just because of supply shortages and things of that nature. So on the right-hand side, we've identified 4 stocks in these 4 sectors that really stand out as leaders. And the first is Kroger. Kroger's accelerating to the upside and is leading all of the stocks actually in terms of its relative strength performance. Catalent has the strongest momentum of these 4, followed by NextEra Energy, which has just crossed into the leading quadrant, and that's followed by Ball Corp. Ball Corp is a big producer of aluminum cans for beverages and things of that nature. So let's move to the next slide. Slide number 2 is actually a look in detail at one of these stocks. We're going to take a look at all 4 of these independently. So Kroger, we're actually looking at a monthly chart that goes back to 2013. And what we're able to discern looking at that chart is not just did the stock post a new all-time record high in the last week, but it is actually broken out and resolved above 2 resistance levels. The first one is a minor resistance level at around 42. The more important level was $38. That was the monthly high dating back to 2015. And by penetrating and resolving above that monthly high, we've actually resolved a base formation that resembles something of a cup and handle, kind of this, standard sort of pattern that we can recognize using basic technical analysis. And so, this cup and handle style pattern tends to resolve to the upside, and it tends to project a measured move that is the distance of the base of that pattern. And so with that, we're able to establish a price target. And so the bullish inflection above 38, if it's sustained, and we suspect it will be, projects a measured move to approximately $58. So we're at about $46 right now. If we want to protect capital and establish, a very strong positive risk view, we consider an initial stop loss provision at about $42, which is about 1 average true range below our entry price here. That would establish a better than 3-to-1 positive risk skew. So we're really looking for those positive odds. Slide number 3 takes a look at Catalent. This is a healthcare company, medical device company. It has actually resolved above a fairly broad base. It's just a number of months here. This is a 3-year weekly chart, 2-year weekly chart, I take it back. And what we've seen here is this breakout above the 127-ish area has established a resolution to a base pattern. And that, classic pattern base of, kind of a cup base, standard cup base, projects a bullish price target to approximately $158 as well. So this breakout above, say, 127, 128, if sustained, and we believe it will be, should take the stock to 158. Now, from where we're at today, about 142, one might want to consider possibly waiting for a pullback here, or only taking a partial position in the stock in case we do get a bit of a pullback and maybe averaging slightly lower. But our view is, as long as the stock holds above that breakout of 128, the pattern will remain valid. But just to protect capital, what we want to do is establish an initial stop loss provision at about 136. And we would do that in order to kind of create that 3-to-1 positive risk skew that we really want to optimize our risk reward potential in this trade. So Catalent is our second favorite name in the space. Chart number 4, which is another weekly view looking back 2 years on NextEra Energy. This is a utility stock that is into more renewable sources of energy. So it has been leading its sector for a number of months now. And frankly, we are impressed with the price action in recent weeks. This weekly chart shows that stock's price action has resolved above a weekly high that was established back in January, and looks poised to resolve above the all-time record price high. It was not a closing high, but was achieved back at around $87. And so, a sustained bullish inflection above $87 would project a measured move to approximately 106, which is about 22% gain. So this looks like it could be a fairly attractive name in a rather dull space. And as we know, utilities are gaining relative strength momentum, and they are not outperforming the S&P just yet, but they have seen strength in recent weeks, and we expect that strength to continue based on its momentum. So with this particular name, what we'd want to do is establish an initial stop loss provision at about $82. That's about 2 average true ranges below our entry price of, say, 86 and change. And that, again, would establish a better than 3-to-1 positive risk view, which really, gives us a decent payoff for the amount of risk that we're taking here. And the stock setup looks rather attractive here, and we've got a lot of confidence based on its relative strength momentum that we'll see a favorable resolution here. The final stock we want to talk about today is actually Ball Corp. And this is a name that falls in that materials camp. And while materials has been a lagging sector, what we've noted is that it's turning up. Momentum is improving. And so, it looks like it's a stock that could rotate into the improving category, the quadrant, and potentially become a leading area. And one of the reasons that we think that's possible from a fundamental perspective is that we are seeing raw material prices advance. In other words, commodity prices are advancing. And because a lot of the companies in that space are producers of these raw materials, they are getting pricing. There are supply demand disruptions and dislocations right now that make raw materials high in demand, short in supply, and that gives the producers pricing power. And companies like Ball, who are in the aluminum category that service kind of a staple type product base of canned goods and beverages and things of that nature. And then they also produce, aluminum for the aviation industry under government contracts. It's a company that's got stable revenue growth potential under these conditions. And so, the stock is acting well. It's recovering from, what appears to be kind of a bullish flag or intermediate base formation of some sort. And we've resolved above initial resistance at around, say, $93. And so, this bullish inflection above 93, if sustained, and we suspect it will be, projects a measured move to about $108 initially. Now, by achieving that target, we would resolve above the prior all-time high of around 102. Now, a move above that 102 level would then give us the ability to project a higher target price to approximately 126. So, this could potentially be a, kind of a two-stage move to that upper stretch price target. Our initial stop loss would be set around $90 or so. That is about 2 average true ranges below the entry price, and again, would establish a better than 3-to-1 positive risk view. So we like the odds on this trade as well. So 4 names that we really want to get behind here: Kroger, Catalent, NextEra Energy, and Ball Corp, because we think these stocks can continue to lead, and leadership is where money rotates to naturally. Institutional money follows the leading stocks because institutions are forced into that category because of career risk. Basically, money managers need to outperform the index, and therefore they buy stocks that are outperforming the index. And that's what we want to do as well. We want to do it before they do, and our strategy gives us a little bit of an edge on that. So with that, if you'd like to take a closer look at some of the work that we do, you can follow me on Twitter at alpha_insights, or you can follow me on LinkedIn or visit my website at jwhinvestment.com, or drop me an email and I'd be happy to connect with you. With that, I wish you good luck trading and thank you for watching.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.